But the action seems to be coming back in the IT pack. In fact, the Nifty IT index is sitting at 2 months high. And this year has been marked by a very stark dichotomy in the sense of how large cap IT has performed versus how some of the mid cap IT names have performed. And that's partly understandable given the growth rates are very different. But what about the way forward? And does the mid cap IT warrant such kind of premium? And will they continue to trade at this premium or not? Let's try and decode that with Vibhor Singhal. He's the director at Nuvama Institutional Equities, joining us on the show. Vibhor, hi, good to be speaking with you. Your new note is very interesting, and I like the anecdote that you have said in terms of clamp stocks. So we heard about FANG and the others. Now we have the clamp stocks also. But talk to us about the valuation differential. Do you anticipate this kind of premium is likely to continue?
Oh, yeah, definitely. So if you look at the stocks, as you basically highlighted, we've called these stocks as CLAMP, which stands for Coforge, LTM, Emphasis, and Persistent. We believe that these companies represent this small bucket of stocks which have fundamentally altered their business, and they will continue to grow at a much stronger growth rate going forward as well. It is not just a COVID story, but these companies will continue to basically grow post that as well. And that is where I believe the valuation premium that they enjoy at this point of time will continue. I mean, if you look at the P multiple, yes, they are trading at a premium to the large cap companies. But I think we did this analysis as well, and we kind of showed that in our report as well, that in the past 15 years, if you see, whenever these mid cap or these quality tier two companies have outgrown or have shown visibility of outgrowing on a consistent basis to the large cap companies, they have traded at a premium to the large caps, which is what we are seeing at this point of time. So we do believe that this valuation premium, which LTI, Coforge, Emphasis, and Persistent are enjoying over the large caps, will continue.
Okay, you believe that, obviously this will continue, but Vibhor, this is Vinny joining in the conversation as well. I also want to understand, what is that differentiating factor for these mid caps, right? What is it that is keeping them apart? Do you think, you said this is going to continue, but what is keeping them apart from large caps, as well as, how do you see AI actually coming into play for them? How does it work for them, and how will it benefit them further as well?
That's an interesting question. I think these days, the last part of every question comes out to be what is going to be the impact of AI. But yeah, I'll probably tackle the first part of your question first. So look, I think multiple things, as again we have tried to highlight in the report, are working well for these companies. Their size is in what we call a very sweet spot between a $1 to $5 billion, in which they are not too small to be ignored by most of the clients, but at the same time they're not too large enough that the size becomes an inhibitor of growth. They have much more diversified business at this point of time. In transformation deals, they are able to capture a huge market share, which are smaller in size. But I think more importantly, what is also happening is if you see the transformation that is happening on the margin side, if you look at the companies, if you look at the large caps, most of the companies' margins in, let's say, FY25, that's for the large cap companies, is probably going to be similar to or lower than what their margins were pre-COVID. But if you look at these companies, their margins post-COVID, that's this in FY25, is going to be significantly higher than what it was pre-COVID levels. These companies have structurally altered their business during COVID times, higher offshoring, much leaner employee pyramid, much stronger growth and diversified revenue base. And because of that, we believe there is a structural permanent reset that has happened in their margins. Of course, there will be quarterly variations. Margins will go up and come down. But I think overall, the margin profile is going to be much stronger than it is for the large caps. So if you put two and two together, the top line growth, the higher top line growth, along with margin expansion, will lead to these companies continue to report higher earnings growth. And that is where I believe the valuation premium might sustain. Now, as for the last part of your question on AI, look, I think we've said this time and again, AI is still in a very nascent stage. The B2B applications of AI are still in very, very early stages and are still yet being explored. All the companies are making all their effort to be able to capitalize on this opportunity because it's going to be a game changer kind of an opportunity. But what we try to highlight this is that, look, this is not the first disruption that has happened for the Indian IT industry. It was Y2K, then it was RIMS, then it was GFC, then you had cloud. Every time there is a new technology or there is a tech disruption, the Indian IT companies take time to master that technology, take time to reach a level in which they are able to grab market share in that. But once they do, every new tech disruption has led to incremental dollar opportunity for the Indian IT companies. I don't see that happening any way different this time as well. All that might differ is the time that these companies take to be able to gain the know-how or master the technology, and after which they're able to get the market share. But other than that, I don't think so. I'm too worried about this Gen AI opportunity. In fact, I see that as an incremental opportunity which might play out over the next 2 to 3 years.
Sure, so we have managed to learn new trends and the Indian industry has remained quite relevant. But if you had to bet your entire money on one of these dark horses, Vibhor, which name comes to mind? Because right now, barring LTI Mindtree, which is already a large cap, the other companies are in 30 to 40,000 crore market cap kind of band. Which do you believe could be the next TCS Infosys of the world?
So in fact, one of the part of our report is that LTI Mindtree could be the next Infosys. LTI Mindtree is our topic in the sector. It's a brave heart series buy that we are recommending to the clients. We believe it has got all the ingredients to become a large company, and we expect very strong growth rates over the next 2 to 3 years for the company. And the good part is that it's not, I mean, unlike maybe let's say the other companies, it's based on the core fundamentals of the two businesses, the enterprises of LTI and Mindtree that we are basing this call on. But as you rightly said, it's a large cap stock, it's a nifty stock. If you want to go down the ladder, then I think in the mid cap sector, I think Coforge remains our topic. The company is doing really well. The new management has taken the aggression in the company to a completely different level. In fact, we also compare that Coforge could well be on track to basically traverse the trajectory of Cognizant of the yesteryears, not of the recent past, I must say, but yeah, of the early 2000s, the way Cognizant used to be the most aggressive, one of the most aggressive companies in the industry. I think Coforge is pretty much on the same path. So if you were to ask us across the spectrum, I think LTI Mindtree remains our top pick in the large cap space and Coforge in the mid cap space.
Right, Vibhor, thank you so much for joining us this afternoon on ET Now and talking to us about the mid-cap IT space specifically. Thank you so much for that, Vibhor. But let's move on and